Good morning, everybody. Welcome to Monday Morning Market Update. I'm Jennie Hendricks at Century 21 Prestige Realty. This is week 30 of your Monday morning market updates where you get all the information you need. Guess what? Inventory's down again. We are at 103 active residential listings right now in our local market, which is very low, and it's continuing to go down. So I'll keep an eye on it for you. But I'm telling you, if you want to list your property, now's the time. We really need the inventory. So I've told my agents that they're just going to have to put their houses on the market because we need the inventory. They're fighting me on it a little bit, but I'm going to keep working on them. So I'll let you know how that goes. Okay, median list price is $320,000. That's down just a little bit from where it was last week, but it's still on the higher side, so I'll keep track of that for you. Median number of days on the market, 37. That includes marketing time, then it goes under contract to close. So 37 days, and a typical escrow in this area is about 30 days. So you can see how quickly our market is moving. 282 pending sales, which is up. And of course, that's reflective of how our inventory has gone down. The number of pending sales is up. Median pending list price is about $250. So that's tracking about where we've been. Sales side. In the last 12 months, there's been 944 residential sales, and the median sales price is $242,000. That's real close to where we've been, so that's an okay number. And I'm gonna take you through what those numbers mean as far as being a buyer in our local market with our interest rates as low as they are. Now, on the 6-month sales, there's been 506 residential properties sold in the last 6 months. That's the first time we've popped up over 500 transactions in the last 6 months here on the Monday Morning Market Update. So again, reflective of how much activity is going on in our local real estate market right now. And the median sales price in the last 6 months has been $246. So again, it's a little higher, but tracking pretty close to where we've been. Okay, let's talk about why that's important. So let's make some assumptions here. The median household income in this area is about $44,000. I'm picking that number. I've seen anywhere from 42 to 47. So for our assumptions today, we're gonna say the median household income in this area is about $44,000. So about $3,600 a month. Now, if a buyer is getting an FHA loan, which is a really popular loan product here locally, okay, there's a front end ratio and a back end ratio. What that means is on the front end ratio, that's how much debt your housing is going to be relative to your income. The back end ratio is how much total debt you have, so car payments, credit cards, etc., relative to your monthly income. So that front end ratio, you can have about 31% of your income going toward your total housing cost. So if we're following our assumptions here, that's about $1,140 a month can go toward your housing costs. Now, if we include taxes, your property taxes, homeowners insurance, possibly mortgage insurance if you're putting less than 20% down, that leaves about $900, give or take, for your principal and interest, okay? So if we have an assumption of a purchase price of $240,000, which is about where our sales have been, the median sales price, FHA loans require a 3.5% down. So your loan amount's going to be $231,600. Now, because interest rates are so low right now, say you get like a 2.875 rate, which people are getting. That makes your principal and interest about $960, which is about where it needs to be for that median income and the median debt. So If that interest rate goes back up to say 3.5%, then your principal and interest is up to $1,040, and that's what is it makes those purchases a little less affordable depending on the interest rate that you are paying. So that's why we're tracking that interest rate so closely, and then that median sales price. Right now, they're not quite as out of whack as they have been if the interest rate is higher. So keep watching. I'm going to keep track of that for you. And if you have questions on it, reach out to me. I can get you with a great local lender who can really dive into all of those details with your individual situation. Okay, let's pivot to some national news, which I thought was really, really interesting. Second quarter gross domestic product, so second quarter, end of June, dropped 32.9%, obviously because of the shutdown, economic shutdown. So that is a historical drop, and included a nearly 40% drop in residential activity, residential investments. That includes home buying, building, remodeling, etc. So that GDP contraction is the steepest we have ever experienced in the United States, which is quite shocking that it happened that fast, and that the government was able to come in and just shut things down and make our economy come to a screeching halt. But there is good news. Okay, Lawrence Yun, you've heard me talk about him before. He's the chief economist at the National Association of Realtors. He believes that the third quarter data will show a massive increase, with personal savings rates being higher than ever. So that's kind of cool. People are sort of saving a little bit more, plus the economy is opening up, and so we're going to see an increase in that GDP again. He says, quote, "There will be an unleashing of spending in the upcoming months as economies open further. Home sales have already been rising strongly, will continue to do so." We've talked about that a lot. The assistant vice president of the Mortgage Bankers Association says he expects the economy to recover in the second half of the year. So he expects all of that we lost through the second quarter to come back in the third and fourth quarters of this year. I thought this was interesting. Check this out. So Fannie Mae, who is not a government entity, but a government-sponsored entity, a GSE, says that only 5.7% of their guaranteed single-family loans were in forbearance at the end of the second quarter. I expected that to be far more. We've heard a lot of doom and gloom and about the economy and the forbearances and housing and people missing rent payments and people missing mortgage payments. This was fascinating to me that only 5.7% of Fannie Mae loans were in forbearance. And that's actually down from 7% at the end of the first quarter. So it's not all doom and gloom out there. There's some actually good economic stuff happening. Here locally, we are continuing to see people move in from outside of the area. There's a lot of local market activity. There's a lot of people coming in from outside of the area. People are realizing that they can have a better quality of life. They're trying to get out of those urban areas, and we've been discovered a little bit. So I'll keep watching that for you too. As far as trends in homes, it continues to be, of course, people want an office, a home office. People are looking at the way they're living their lives. They want a home office. They want a little bit more space. They want maybe a bigger yard, and great places like this offer that. So we will keep an eye on that for you. I hope you have a great week. Again, I'm Jennie Hendricks, Century 21 Prestige Realty. This has been your Monday morning market update. We'll see you soon.